You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call around here the Option Block. Everyone's favorite, at least I hope it's your favorite. It's certainly mine. Bi-weekly source for all things options related. A little bit of options wit, some wisdom, some analysis, throw in some unusual activity, stir it all in with your questions, some Uncle Mike strategery, and a peer into the future. And you have the tasty, delicious cocktail that is the Option Block. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-expanding Options Insider Radio Network. If you're saying to yourself, hey, how do I get access to all those great 500-plus episodes you guys have done of the Option Block? I'm tuning in now maybe for the first time, or I'm just kind of new to the network. Well, of course, the easiest place, the mothership, the flagship, theoptionsinsider.com. You can get all those episodes, as well as our newest additions to the network this week in Futures Options, as the name implies. Break down some futures options activity, as well as a little bit of nonsense every week with the business show and all the other fun shows we do. Vol Views, Advisors Option, Boot Camp, and so on and so forth. You can also find all of that programming, iTunes, TuneIn, Stitcher. Probably the easiest way to get it all there is just grab our network feed. It has all of the shows in there, a daily news show. So if you really want to mainline some options content, then we've got you covered. And of course, while you're in those stores, make sure you grab our mobile app, available for iOS and Android, and even the Fire OS. And that's cool too, because you can stream on the go, and you can always download on the go as well. So if you're going to hop on a plane or something like that, you can queue up a few shows to make the time pass that much quicker. And of course, however you listen, downloading, streaming, of course, I forgot to mention, you guys can also join us every Monday and Thursday for this program, streaming live 3 p.m. Central, 4 p.m. Eastern via the Mixlr app. That's Mixlr. You guys can just click on the link we tweet out all the time. You don't even need to set up an account. If you want to chat with us, you have to set up an account. But for everything else, you can just stream live and always use the old Twitter or something else to hit us up if you really feel so inclined. But you guys can also do that if you're joining us, if you're able, on the afternoons, Mondays, and Thursdays. We love to hear from you guys. And joining me on the program are the usual cast of characters plus one. Let's go in order of reverse proximities. Let's go all the way out to the Grand Duchy known as Maine, where we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, how goes things, and how goes the grand school of ducks, or whatever flock of ducks you have on your? I'm sorry we had to pull you away from that. I know it was mesmerizing.
The ducks are ducking, and it's the Grand Duchy of Maine is quite lovely right now, I have to say. Summertime. It's summertime when there aren't any Maine license plates on the roads anymore. It's all Connecticut, New York, Massachusetts, Rhode Island.
My fellow nutmeggers. That's the one time a year we'd make it up to your neck of the woods to see what's going on with the Mainers when the weather got nice. The rest of the year, yeah, not so much. Unless you're hardcore for the original Portland, Maine. None, forget this Portland, Oregon. Portland, Maine, baby. That's where the action is. All right. And also joining us on the program today, we are joined by Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the old program, sir.
Always happy to be here on a nice warm day in the Chicago area.
It is quite warm, pushing up into the 80s. Not quite as warm as where I just came from. I was way down south and about as far south as it gets before you get into the ocean. And that was pretty toasty down there. We were pushing triple digits many days there, so that was pretty toast. Not so bad here in the Options Insider studio hinterlands here, but still not bad. And even closer, drawing that circle ever closer, he's pretty much right down the street. I could throw a stone and hit his office here from the Options Insider studios. We are joined once again by Steve Claussen, the Chief Investment Strategist over there at OptionsHouse. Steve, welcome back to the program. Sorry we couldn't have you in the studio today, but this is like the next best thing because you're literally about 2 blocks down the street.
Yeah, I can see your office from here. It's great to be back again.
Probably put some pants on in for the window, so it's a good thing. Good thing this is a radio. All right, with the team assembled, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the name implies, this is indeed the portion of the program where we break down what was moving, what was shaking, what caught our eye in today's market activity. A bit of an upside day, you might say. We are recording this and indeed streaming it live Monday, July 11th for all of you playing along after the fact, recording this right after the closing bell here, 3 p.m. Central or so. And an interesting day. We were talking last couple of weeks on the show about all of the continued fallout from Brexit. Looks like that was going to erase any chance the market had to go back to those all-time highs. Well, not so much. S&P going right back up to those all-time highs today from, I believe it was, May 20th of 2015, closing the day today up about a little bit shy of 0.5% to about 2137. The Dow and the Qs also up about 0.5% or so. And VIX cash also taking a bit of an inhale today, up about 0.4 of a handle there, right about the 13.5 level again. Seems to be glued of late around that 13.5 level, at least for the foreseeable future. Of course, a lot of that boost coming on the heels of some news coming out of Japan regarding the elections, as well as I think maybe just the continued halo of Friday's non-farms kind of just shocking the heck out of everybody to the upside. So a little bit of that combo, as well as perhaps, who knows, maybe there's a little bit of excitement. We're kind of back in it. We've been talking macro nonsense for so long. It's finally time to turn our attention back to some actual concrete numbers. We've actually got earnings back yet again. That's kind of fun. We're kicking it off today with the granddaddy of them all, the grand poobah, Alcoa, a market mover if ever there was one. Not really the most exciting of names, but still an interesting one nonetheless. They closed right around $10 even today. They're coming out after the bell. They were pricing in about 65 cents, or right around 6.5%. We'll see how that bad boy delivers today. But whenever Alcoa comes out, it always brings a smile to my face because it always means there's a lot more fun stuff and crazy stuff to come in the coming weeks. Alcoa lighting it up today, too, averaging about 51,000 contracts a day, doing over 200,000 today. So lighting it up. Everyone excited, I think, to see earnings bring the focus back a little bit more domestic, a little bit more concrete, as opposed to the Sturm und Drang of the Fed and indeed the craziness of Brexit. All right, let's turn our attention now to what's catching your guys' attention. Steve, we'll start with you. You get the dubious honor of going first since you are our guest. A lot to talk about. You know, we haven't even had a chance to check in with you it's been about almost a month since you've been on, so we haven't had a chance to check in with you even post-Brexit. So maybe let's start there. What have been your thoughts on kind of just the crazy tumult we saw immediately after the announcement, as well as the subsequent rally we've seen in the market over the past week or so? Then, of course, whatever else caught your eye in today's activity.
Oh, thanks, Mark. Yeah, you're absolutely right. Brexit, big shocker for the market, right? Markets don't like surprises. They do not like surprises at all. And so we saw that 2-day quick sell-off. But the shocker was the V-shaped recovery. I mean, it looked so ugly, so badly, so quickly. However, we saw over here at OptionsHouse, we saw a lot of retail investors using that sell-off actually as a professional would, as a way to take advantage of the spike in volatility, the reduction in prices, and for the first time, I can proudly say a lot of our retail investors, sort of held the line and used that as an entry point. And I think obviously, you look at the price action in hindsight and you see that lots of people must have done that because the recovery was relatively swift, relatively straight line. We had two of the best days of the year last week, and you thought, oh wow, maybe it went too far too fast, and then yet today we found more excuses to rise to an all-time high in the S&P 500. I mean, it's shocking, and I think your point about what traders are looking at, they have focused so long on either geopolitical or Brexit or all these macro, the Fed, all these macro stimuli, all these macro catalysts. I think you're right. In my weekly blog today, I wrote about, can we finally focus on some specific results? And I think that the table is now set that the macro Brexit fear of missing out, recovery, it's still there. It's still going to be there. But I think a lot of the macro issues are taken off the table, and I think traders are going to start looking at these specific results. You mentioned Alcoa. I mean, Alcoa only exists to tell traders, hey, it's earnings season, wake up.
I know, that's totally the only time I ever check it is once a quarter. I don't know.
And I'm actually shocked at those option numbers you saw today, because I didn't think anybody traded it. They just looked at it and said, okay, now right away financials will be what we'll talk about as far as what we're focused on this week. But much later in the week, much more important names. But obviously, people are so ready to trade earnings that they jumped in with Alcoa today. And you mentioned, earnings are out, and in the extended hours, Alcoa is trading up at 1060, so up about 45-50 cents from the close. So the options predicted about a 65-cent move. We'll see what it does in the morning, but the first move is to the upside, and it's about 50 cents higher.
There you go. So that straddle pretty close, overshooting a little bit. But again, this is the first blush, the first move. We all know not only to take this really with a big grain of salt. It has to be sorted out. But yeah, I was kind of surprised with those numbers as well. 215,000 contracts going up in Alcoa today. I think that kind of just confirms what we've all been thinking. People are excited to talk something concrete for a change. Let's go, Mr. Rock Lobster. I know you're probably excited as well. You're a diehard fundamentalist at the end of the day. You like to get back to the nitty gritty, to the numbers, and forget the kind of crazy when will they leave the EU, how will that work, and all that. When will the Fed act, will they act, and kind of all the other nonsense we've all been kind of just dragged kicking and screaming through over the past couple of months. Now here we are, Alcoa. I think fun times are ahead. You concur, sir?
I just want to say, is it over yet? Is all of the Fed... You know what? Next week there's another VIX expiration. There's another FOMC blah, blah, blah. And they're going to be yakking and talking again. And I think that I honestly, it looks like things in the U.S. are pretty good, except the rest of the world can't get interest rates above zero. So it's kind of, I feel like we're, like the hottest chick at the dance right now, but the dance ain't so great because we might be the only one. It's just there's not. Japan, you got Abenomics again, negative interest rates. Europe is on their way. You got a country leaving. You got all of this, and the U.S. just keeps powering along because we just have Congress as a problem, which I guess doesn't appear to be too big of a problem anymore. And we got an election. So I think, you got a relief rally. I think there's a lot of money on the sidelines, and everybody's just been watching this rally and nobody's been believing it. So, it's not going to surprise me to see higher numbers at this point, because don't forget, two major sectors aren't participating. One, financials, two, oil and gas. They still have not really participated in this rally whatsoever. So it's not going to surprise me if we continue to go higher, but I do think overall that the realized vol is still pretty high, and I think options are all now way too cheap. So that's what we've been talking about in Option Ped, basically how to try to finance, long option plays, looking where the stuff is relatively expensive. The Brexit thing seems to have played out, at least for British stocks, so it's like how much lower can they go? Looks like a good place to sell juice, and then buying cheap juice everywhere else doesn't look like it looks smarter. Mark was talking about this last week, just owning gamma, like the short iron butterfly type stuff. Buy the guts, sell the skew, and just let the market do what it's going to do, because we're either going higher because the rally is real and everybody's doing the big relief, or we're going to have some dumb thing out of the EU again. I think the surprise is still like the strength of European banks. Basically, the Brexit thing was a shock. The pound moved huge. Now, somebody out there had massive bets on what the pound was going to do, and somebody's wrong. There's at least one person that was wrong, big. And I think there's still some scaryville out of there on what's happening to the derivative books, maybe, of some of these banks. So that was kind of the rumor mill. When we do unusual activity, there was massive 5-level put buying in Deutsche Bank. So why you would buy those puts when I was trading, the only time people bought puts like that was the CDS guys, because they were selling 200 volatility somewhere else, so they'll buy 100 volatility in the options market. So, the U.S. looks okay. Is it all-time high okay? I don't know, but I guess it's just doing better than everybody else, and everybody else has zero interest rates or negative interest rates. So, take your pick. We have been saying this all year. It's a strange game the central banks are playing, and we wish they would just stop it and stop trying to, make everybody happy all the time and just let something get ugly for a few months. But we'll see. And that's how.
Right in mid sentence, looks like the magic of the main Skype connection fell out. He needs to pay his Skype bill up there in the hinterlands of of good old Maine. We'll work to get to the Rock Lobster back. He's always good for a nice quotable pearl of wisdom. We're the hottest chick at the dance, but the dance ain't that great right now. I like that. He's always good for a nugget or two out there. Meanwhile, Uncle Mike, while we try to bring back the Rock Lobster and fix his technical issues, what's catching your eye out there in today's activity, sir?
I get to say what I haven't said in almost a little over a year, Mark. Never in the history of the entire stock market has there ever been a better time to sell than right now. It's a mathematical fact. Does that mean that tomorrow might be a better time to sell because it'll be higher? Who knows? But we're at all-time highs again, and so it's always exciting when that happens. And I can say my silly quote that I just said. But anyway, yeah, today a lot of it was very impressive how fast the market bounced back from the Brexit scare. And so what I'm looking at right now is we need to maintain the levels that we're at right now. So I think right now could be a very good time to get into this market, but I would do it with extreme caution, meaning that I would have either a very tight stop loss if you're not using options, and if you're not, shame on you for listening to this show. How dare you think of such a thing? Or have some type of a really good hedge on because of the fact that in order for the market to go higher and continue to go higher forever, it does need to make new all-time highs, and it did that today. So from that standpoint, it's a very positive thing. Now, here's the negative side of it. We've been here before. We didn't make all-time highs by that much. If you look at a chart of the S&P, a couple of years ago, we have been at this level in May of 2015. So about, a little over a year ago, this is where we were. So the concern that you need to have as an investor is, are we approaching a double top in some way, shape, or form? And that's a very valid concern. We've been kind of just diddling around here for almost 2 years in the marketplace. So are we going to actually break out? Is this the big one, Elizabeth? That's the question that needs to be answered. So what I'm doing, if we are at higher levels tomorrow morning, I do plan on adding more deltas to my SPY long call strategy positions, but it's going to be one to where if it pulls back, I will be taking them off very quickly. So that's the way with which I'm treading in this market. Right now is a good time to, if you are bullish, it is a very good time to be buying calls just because of volatility being as low as it is as well. The fact that we have earnings coming up, I'm equally as excited just because of the fact that we can just talk about something else on the show besides the Fed. Now, I am sad to say that we can't say Brexit 35 times like we did before, because it is a fun word to say, but the fact that we're going to be talking about Alcoa and all the major companies having their earnings coming out, that's a very exciting thing as well. So The only thing that I would add to this is treasuries are still at, like TLT, for example, is still at a pretty high level. Yeah, it did get beaten on today a little bit, but the fact that we haven't had a drop in treasuries, that's one thing that is concerning to me, and that's another reason, along with the numbers themselves of us being at all-time highs, like I just described, but the fact that treasuries have not come down is something with which to be concerned, I believe. So with that, I think tomorrow would be and tomorrow being, of course, tomorrow will be July 12th, would be a good time to maybe start dipping your toe into the water a little bit and ride some of this upside momentum. But the concern I have is that if we do drop below the all-time highs, I'd start dipping your toe out of the water as fast as you dipped it in. And also, I'd like to see TLT and the IEFs of the world come down a little bit before I become that much more of a believer. But for now, dip that toe in, folks.
And since you're talking about dipping your toe and perhaps adjusting some of your deltas out there, you said SPY. Maybe I can convince you to use another product with what we're about to talk about here. Of course, if you want to go big or go home, SPX is the S&P 500 option du jour. And in case you were saying to yourself, the Wednesdays is good and Friday expiration's kind of good, but I just need more expirations in my life. That's not enough. I need more days of expiry. Well, Cboe's got you covered, announcing today. They've been talking about this, but kind of officially announcing today that they are applying for approval for Monday weeklies on the SPX. Going to try to launch them if they get regulatory approval on August 22nd, a very auspicious day because that is indeed my birthday. So a good day to launch a new product, I think. But still, Steve, whenever I see announcements like this, I kind of just shake my head and chuckle. And I'm very thankful that I'm not in the brokerage business, because every time one of these new expirations crops up, and the notion of Expiration Friday being this once a month kind of seminal event is so quaint and so antiquated now, because of course we have it every week. Then they're amping it up with the Wednesdays, and now Monday. It's just a matter of time, until every day of the week is Expiration Friday. So first off, what are your thoughts on these new potential Monday weeklies? And then a corollary to that, are you filled with cold dread at the thought of soon every day of the week being Expiration Friday, essentially?
Well, Monday, Wednesday, Friday. It's going to be every day already, right? My wife used to bemoan the third Friday weekend of the month because I would come home so dead. I had nothing left for her or the family for the weekend after expiration. But you're right. That is an antiquated, cute little thought of years gone by. The CBOE, they have an exclusive on the SPX. They are the only one who can list SPX options. So, of course, they want more expirations. And when they did the Wednesday expiration, I was so angry with them that they, thought, oh, yeah, investors need this, right? Because they can't wait 2 more days to have a weekly expiration on Friday. And yet these Wednesday options, these Wednesday SPX options have been phenomenally successful. They have liquidity. They trade. I'm sure the Monday expirations will trade. But as a retail broker, these expirations are tough. They're tough to educate the customers to make sure that they know what they're trading. You click the next expiration date you see in the on the chain, and unless you really look at the date, you don't know if you're trading next Friday, or it might be the end of the month. It might be the end of the quarter. It might be, a 1-day option. It might be a 2-day option. People will adapt and they will get used to it. But really, we need to have a Monday expiration, and yet they're gonna trade. They're gonna be successful. They're gonna create more volume for the CBOE. They say, oh yeah, you can hedge your weekend risk. That's true, but Wednesday's expiration wouldn't have hedged the weekend risk, or the next Friday wouldn't hedge a weeks of risk. I just think that they are more vehicles that make derivatives trading skewed huge on the speculative side of the equation as far as why we use these instruments, and much less so on the some of the other I'll say it, possibly more responsible uses of derivative products. The one good thing is they're doing it on a cash settled index. So there isn't the delivery issue that a normal expiration has, where, right, when you're long an option and option premiums are really low now, and people are saying dip your toes in the water by buying some call options if you want to be long, perhaps. If you buy call options, the most you can lose is that premium you pay for the call option. If you buy a call option on a physically delivered instrument that happens to expire within 12 hours or 4 hours of when you buy it, and it automatically exercises into long stock, now all of a sudden your risk is phenomenally much more than 100% of what you paid for it. So, I'm sort of, I'm really both ways on this. It is coming that it's going to be every day. It does allow speculators to have an enhanced or an immediate risk reward outcome result. I do think that the SPX is a big enough product that there are enough people looking at it that it will have liquidity. It will allow you to trade. I just don't think it's necessarily for, mom and pop retail investors.
Yeah, I agree with you, Steve, on that. And that it does encourage bad behavior in some ways. It's like whenever there's a new bar that's coming to town, it might be fun to go there and watch the game or something like that, but you're going to get your share of drunks, unfortunately. So where I personally would use that is if for some reason there was some type of a weekly option with which I was looking to do, and for whatever reason it lined up to where it's on a Monday, and I normally would have to wait another couple days, and there's a chance that I personally would use it, but it would be not very frequently. I remember I was very much a champion of the cause of when they first started with the weekly options a few years ago. What I wanted to do was just have it set. What they started with was they had them to where they'd have them for 1 week, and then you wouldn't have them again for another month or so. That made it kind of difficult to roll or to do things. But when they had them 1 week, 2 week, 3 week, 4 week, and 5 week options, that was beneficial. But at this point, I'm pretty happy with what we got, but I would just encourage anyone, just be careful with what you're doing.
Speaking of being careful, you got to be careful if you trade some of these other crazy stocks we're talking about. Of course, it wouldn't be yet another day without another mention of some nonsense from Tesla. And today seems like all it took was one ridiculously cryptic tweet. Let me see if I can pull it out. Yeah, working on top secret Tesla master plan part 2, hoping to publish later this week. Well, apparently Tesla's so hype driven, and they've got the hype machine so dialed in, you can make arguments about what the rest of the company does, how good that is, and how effective they are. But they're certainly effective at the PR side of it. That was enough to send the stock up, about 9 handles today or so, seeing about over 1.5 to 1 calls over puts, and just a frenzy out there in Tesla. All it takes is a tweet. It's amazing. Even they did this last year too. I think when they had bad earnings, or maybe earlier this year, they just turned it around with a tweet. It's amazing how they have that dialed in. So I take my hat off to them in terms of just keeping the hype machine alive, even with nothing else really much going on with the company. They managed to keep their name out there and keep driving the stock up, close up a paltry 8 handles today off that news, or nearly 4%. And speaking of crazy news, I know we're running long on the trading block, a lot of fun stuff to talk about. And I had to put this in there. If you guys have a young kid out there at home, I know I certainly do. You are familiar with this, and I saw it in full effect this weekend. Pokemon Go is out for mobile, kind of Nintendo's first real foray at a mobile game after having some silly ones in the past. But this is the first time you can really get Pokemon on a non-Nintendo device, and the world is devouring it. We did all sorts of Pokemon hunts all over downtown Chicago here. Millions of kids were doing the exact same thing all over the city. We were out in the suburbs. Later that same weekend, we saw packs of kids just congregating around different areas and Poke gyms, battling and doing stuff and collecting Pokemon. So clearly this is huge. The stock was up about 25% over there in the Tokyo markets as a result. If you're curious, their symbol, obviously not optionable, so not really an options story, at least not here. It's NTDOY if you want to look at the Pokemon the Nintendo ticker, but still very, very crazy stuff nonetheless. So two kind of crazy fun stories. I don't know, Andrew or Mike or even Steve, you have anything you want to add on those, but they're kind of fun, and people always like to hear about Tesla and some silly stuff. So there you go. That's our dose for the week. Anything on those two stories before we keep on rolling into our delayed but still fun odd block?
I just have a little addition on the Tesla. I think the Justice Department or the SEC is now looking into, it came over the wire about how Tesla is letting shareholders know about their about these tweets or something like that. Literally, it just came over. I don't know if it's about their corporate action with taking over SCTY or not, but they've got somebody's attention over there.
Yeah, there's of course all these rumors of nepotism as well, because apparently he's cousins with the Solar City CEOs, so that always helps. And then of course a lot of other issues interesting. Of course, none of that dissuading people from buying the stock today thing off to the races. So we'll keep an eye. Tesla always good for a quote or two and a story or two. But now it's time for us to keep on rolling into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. It's time for the Odd Block, the portion of the show where we boldly venture into those dark alleys of the options market, so you don't have to. Trying to find some dubious, perhaps shady, call it what you will, just usually downright interesting paper that is lighting up the options market today. We're going to kick things off, actually, Steve. This is in your neck of the woods, or actually, I should say the Option Monster neck of the woods, not OptionsHouse. I know you are separate but related entities. And you guys over there at Monster were pulling up some interesting stuff on some bullish paper over there in Macy's, actually. It was the July 36 calls that were lighting it up. If not familiar with Macy's, of course, ticker symbol M, closing today just shy of the 35 handle, about 34.86 over there, and they were gobbling up the July 36s, 3,500 of them for prices from about a little over a dime all the way up to about 16 cents. That's pretty aggressive paper. The OI on that strike, only about 2,000 contracts. So interesting stuff. I know you guys on both sides like to do a lot of unusual activity scanning. So what are your thoughts here before we dive into the rest, Steve, on some of this paper over there in Macy's?
Yeah, Macy's. Well, first of all, Options Monster is an affiliated company of OptionsHouse. It's owned by the same owner, and they have a nice service where they monitor the entire options world, look for institutional paper, outsized paper, significantly bigger than the open interest, to see, what new action, what new opinions are being generated. It doesn't mean that someone was in there big buying $36 strike calls in Macy's, $1.20 out of the money, 3.5%, 4% out of the money, expiring this week. Thank goodness they didn't have a Monday expiration option. Otherwise, they probably would have bought those. But, they expect a real quick move in Macy's to the upside potentially. And quite often, people see that and they get all excited and bowled up and everything else. And the stock doesn't do what the call buyer was possibly hoping for. But if you think about it, if this is an institution buying this, saying there's a potential for some shenanigans, and if we're on the program again on Thursday and we hear of something that caused the stock to spike through there, then we'll say, then we'll really say, But, it's kind of a cheap bet, right? These are cheap little options that if something were to occur, they would pay off in spades. Macy's last earnings, this is not earnings related. Macy's doesn't report earnings until mid-August. But last earnings period, the retail sector, the brick and mortar retail sector, just got absolutely smoked. It wasn't that long ago that Macy's was, was what, a $40, $50 stock. So, they're looking for a quick little turnaround here.
Indeed, they are. And speaking of quick turnarounds, we're going to do a quick turnaround into another, not really retail, more on the, I guess it's an organic retailer, perhaps. This is Sprouts Farmers Market, ticker symbol SFM, a newcomer here on the old odd block, closing today $23.71, off about a quarter, or about 1% on the day. It's something that does about 900 contracts a day, so about right in line for a lot of the odd block companies we like to talk about here. Doing, about nearly 20,000 today, so a wee bit more, just to say. About 18-1 calls over puts. That should give you some inkling of what we saw. And we got a kind of a bit of a narrative, a bit of a theme to the odd block today, listeners. It is rolls, and our first roll that kind of caught our eye, at least seeming to be rolls. Starting off, looks like a July 25, Aug 27.5 call spread going up. A total of a bit of a ratio, looks like about 5,000 by 10,000 total. We started off seeing this go up only about 800 or so times as the day went on. Clearly, more paper went up. Open interest about 4,000 contracts on the Julys, which is indicative of at least a close, maybe some piggyback paper coming in for that last 1,000, or perhaps it is indeed someone piling out, because it does exceed the OI, what we see going up today. And of course, the 27.5s in August, all opening, only 2 contracts open there. So interesting size going up out here in SFM. Not surprising, all that AUG call love driving up the vol quite a bit out there in AUG land. And looking at this name over the past year, it's kind of an interesting play. It's kind of vacillated, obviously the August 24th outlier aside. It's kind of vacillated from the low 20 handles up to a brief flirtation, very quickly dancing with 30 and then coming right back off. So kind of been in the 20 to 30 range, obviously 23.71 on the lower end of that range, mid to lower end of that range right now. Mr. Rock Lobster, let's take it off here. What's your thoughts on this roll here? Someone still not giving up the ghost here, and they're going up and out in SFM.
This is, I like the name, Sprouts Farmers Markets for this name.
Say that 8 times fast.
Exactly, is Sprouts Farmers Markets. Closing July, definitely buying the August. Vol was up size. So I'm thinking White Wave Foods. I'm thinking potential takeover spec. Their Julys didn't work, so they want to do it twice as big in August. Could be.
It doesn't work once. Go twice as big, right?
So, but they went farther out of the money too. So it feels, I didn't really see any kind of stock against this, so it just is feeling like that kind of straight up specky call buying. But August 27.5 calls, I mean, realize obviously the market's really taken a big, it's taken a huge move up. And I mean, the stock could get back there, right? So it looks like it's kind of a straight up bet on earnings, and it feels like a little takeover frothy, just a little bit from, because I know that White Wave Foods got taken over. I mean, not the same, not totally the same industry, because they had organic milk and stuff like that, but kind of healthy, foodie, growy takeover type of paper thing. That's what I'm gonna say.
Yeah, not an area we've been too focused on of late. A lot on the odd block. Usually, it's been a lot of mining and a lot of petroleum and energy related names, and a few tech names smattered in there as well, and of course our share of cheapy biotechs. We love those. But haven't done the organic grocery scene in a while, so we'll keep an eye on SFM. Maybe file them and to be watched to see if this paper pays off. Meanwhile, let's move on to another newcomer here on the show. I don't believe at least it hasn't been quite some time. This is Lifelock, ticker symbol LOCK, L-O-C-K. Closing today just a tick under $16. This is the name that does about 1,400 contracts a day, doing, again, nearly 20,000, 220-1 calls over puts. That, once again, should tell you exactly what we saw. Remember, our theme for the odd block today, listeners, is all about rolls, and we saw yet another one of those. Interesting roll out here in lock. In particular, it was the July AUG 16 call spread going up yet again. We saw it initially going up about 8,000 by 7,000 times as the day went on. A total of about 11, nearly 12,000 on the July versus only 7,000 on the August. So this is kind of a little bit of the reverse ratio here, Mr. Rock Lobster, where you gobble up the July. It looks like it probably maybe worked out for them on this one. If they did, I mean, the July went out right at the strike. I'll have to look and see where they bought them, but chances are it probably worked out all right. But even if that's the case, the paper may indicate that perhaps they took a drubbing because they only went out and picked up another 7,000. So unlike our friend before, who perhaps didn't work out, let's go twice as big, our friend here saying, I'm sitting on some house money, and perhaps, and usually when you see that, that's when they go twice as big. But this guy actually cutting it, not quite in half, but cutting it down to about 2/3 of the size. Again, about 14,000 open on the Julys, only about 1,100 on the Augs. All of that going up in 3 big chunks over there on the Philly. Mr. Rock Lobster, kind of a tale of 2 rolls in many regards. This one perhaps equally as head scratching as the last.
And certainly not lobster rolls. These are option rolls.
No, nowhere near as tasty.
I know a little bit about the lobster rolls, but this type of roll, but it's smelling like really bullish. All-time high, go. They were long these Julys. Maybe they scoop them. They roll into August for a bunch. It feels like August. There's, at least for these 2 names, people are trying to scoop some earnings premium and just buy calls. I mean, it's pretty aggressive. Just, all right, I'm just going to buy a bunch of calls and see what happens. So it still looks like just good old-fashioned bullish paper, real bullish paper.
And since we're talking about bullish paper, let's flip the script dramatically and go to the dark side. We're going to round it up back in the financials with Deutsche Bank. Of course, bank's going to be on the radar later this week as earnings season kicks off. Someone obviously not too excited about maybe what the future holds for Deutsche Bank. Ticker symbol DB, closing today about 13.30, so right around up about 33 cents or about 2.5% on the day. It's something that does about just a tick under 14,000 contracts a day, doing a whopping 54,000 today. So pretty size, pretty aggressive paper, and not at all the call buy-in or the call rolls that we've been talking. In fact, 7.3 to 1 puts over calls out here in Deutsche Bank. So that should give you some inkling as to what caught our attention. And to find the paper, you got to go all the way out to January. In particular, the very interesting Jan 5 puts. Yes, Jan 2017 5-handle puts. So a little over $8 out of the money on these bad boys. Someone was gobbling these up and doing it for size. It started off 3,800 going up over there on the ISE. Paper buying them, for about 22 cents. As the day went on, a lot more traded to the tune of about 25,000 and change at a variety of prices. They went out 20 cents at 25. So again, interesting stuff here, Mr. Rock Lobster. If you are a stockholder, an interesting level to want to hedge yourself at. This thing was not trading down there recently. It was actually much higher back towards the end of last year into the 30s. So it's not like this guy probably got in at the 5-handle. Maybe he has some other vested interest in this. But clearly, it's an interesting one. There are rumors, of course, of some lingering concerns about some derivatives exposure in Deutsche Bank. So our friend here perhaps decided the 5 strike was his handle, his most effective handle for size versus price. But still, this guy is calling for the apocalypse in Deutsche Bank for these bad boys to come through.
I thought so. Do you remember, those down? I thought I said this before, but before I probably cut myself off. But usually they're by puts like this because there's a big CDS book, and the CDS guys, they'll pay up for puts in the equity market because they get to sell the CDS stuff or the credit default swaps for such big dollars. It feels like that kind of a play, but when you think about it too, it's a 5% return on the 5 strike, right? A little bit better than that if you sell those things for a quarter till January. So it doesn't look horrible from that point of view, but I mean, you're buying those things. It's totally useless to buy those against stock because they're still $8 out of the money. So
you're not getting a ton of deltas on those bad boys.
Yeah. Plus, and as you go down, even if you go down to $5, what are they going to be worth? 65 cents or 40 cents. So it's not a very. To me, it feels like a CDS type play, and they're just looking to hedge. So assuming that the market and again, one of the problems with the market we have is that they have, we have our stocks at all-time highs, but the biggest European bank is at multi-year lows.
Yeah,
too much.
I would jump in too and say it failed the stress test, right? It was one of two banks that failed the recent stress test. So Deutsche Bank has seen better days if you were short the CDS, you would definitely want to buy these things to hedge your exposure to the CDS for them defaulting on their credit, and you need to own these little puts. And a lot of times these little puts at 22 cents are cheaper than the edge they believe they're getting on the credit default swap.
Seems to be. You're right, Andrew. Buying these with stock makes no sense. These are about a little over a 4 delta, these puts. So you're not getting a lot of juice for that delta if you're looking for it. Interesting stuff. Interesting odd block all around. But, of course, it's Monday, listeners. It means it's time for Uncle Mike to come on down from his high horse to dispense some options, wit, and or wisdom. It's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, you know what time it is. We've been gassing on some of our other segments, but it's been really fun. We don't want to strip you of time, so have at it, sir. The floor is yours.
Oh, no umbrage today, but maybe another day. Anyway, what I want to go through today is there's a lot of people right now who are covered call traders that probably have some of their covered calls going in the money right now, and they're not too happy about it. So I want to go through an alternative, something to think about right now in case you are a covered call trader. I've often said on this show that for those of you wrestlers out there, the best way to get out of a double chicken wing is to not get into it in the first place. And so with a covered call, the only bad thing that can happen with the covered call itself, now obviously the stock can go bankrupt, but that's not the covered call's fault, that's the stock's fault. But the thing that frustrates covered call traders a lot is when their stock goes in the money and they think, oh, why did I do this dumb covered call? Well, first off, in reality, you're making as much money as you possibly can. So number one, you should be happy about that. But number two, if that's something that frustrates you, if it's something that often just gets under your skin, I'd like to offer an alternative to you and something to think about and why I like it. That would be selling a covered call or selling a call spread instead of selling a covered call. Here's what I mean. Let's say that XYZ stock is trading at $100 a share and you want to sell the 110 calls. And it doesn't really matter what month it is. The concept still applies no matter what. But you want to sell the 110 calls. You're getting great premium on it, and you believe that, well, heck, if it goes up to 110, I'd be tickled pink. I'd make a 10% profit. So why wouldn't I want to sell this? I'd get out of it at that level anyway. Great. Then the stock goes up to 132, and you're thinking, oh, my gosh, these covered calls are the dumbest thing ever. Why did I ever do this? If that is you, one thing to think about would be to do something along the lines of buying the stock, selling the 110 call, but also buying a 115 call, or perhaps a 120, whatever level works the best for you. Here's why. In a call spread, you actually have limited risk instead of unlimited risk. Now, by risk, I mean the opportunity risk, meaning that let's say that you sell a covered call, you're limited to any upside from 110 and beyond. Anything above 110, you get nothing. However, if you pay money and buy a 115 call, you're still getting a premium, you're still getting the income and all the wonderful things of a covered call, but for a little bit of a price, you're buying some insurance in case the stock does just rip up to high heaven, that you can actually participate on it as well. Instead of giving up all of your upside, you're only giving up a portion of it. Now, you might say, well, Mike, I don't want to pay that premium by doing it. I don't want to pay for the premium of the 115 calls. Well, here's some food for thought on it. When doing so, if you look at implied volatility of options as they go higher, typically, not all the time, but typically as options go higher in strike price, then implied volatility does become lower. Once again, not all the time, but a lot of times implied volatility does become lower to the upside. So you're actually you're buying an option with lower volatility and selling an option with higher volatility. Once again, not all the time, but it does appear that way a lot. So with that, you're still getting a credit from the call spread, you're not getting quite as much of one as you would from a covered call, but you are still getting a credit. And a lot of times, if you buy one a little bit further out of the money, like I just described, it's not going to cost you a lot. And yeah, you'll get a little bit less of an income from month to month, but the concept is, or from year to year or week to week, whatever way you do it, but the concept is that for a little bit more money or a little bit less money of a credit, you get the peace of mind of knowing that if the stock does go ripping up to high heaven, you can be a part of it. And for those of you that have covered calls that are in the money right now, because of the fact that volatility is lower right now relative to where it was a couple weeks ago, a lot of times people, when the covered call goes way in the money, are like, I'll just roll it up and I'm just going to keep on going with this. Well, another thing to think about is maybe buying a further out of the money call because implied volatility is that much lower. Not saying that's the best thing to do, but it's something with which to consider right now. So with that, I would encourage you to look at the strategy of selling a call spread in lieu of selling a covered call. Or if you're doing a 10 lot, maybe buy 5 of them, 5 upside calls as a way of protecting your upside potential on the stock. Whatever works best for you. And that is the strategy block for today.
All right. Thank you, Uncle Mike. We are running a little bit long. I do want to do it really real quick. I like to squeeze some questions whenever we can. So we'll do a real quick mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. It's not Thursday, so I'm not going to do a deep dive, and we're running a little long on the show as it is. But I did remember, as Steve was talking earlier and looking at some of your stuff coming out of OptionsHouse, last time you guys were on, you were talking about potentially becoming an FCM, a futures commissions merchant. And we had a lot of people in our chat room in particular who were chatting in saying, hey, what is this FCM thing? What does that really mean for us as options traders or just in general? Not a term I don't think they hear very often on the options side of the fence. So why don't we go ahead? I'm throwing you a bit of a curveball, Steve. I hope you can run with it. But in a nutshell, for all those people out there who are asking, hey, what does that mean, FCM? Why is OptionsHouse doing it? What does that mean? Why don't you go ahead and set them straight?
Yeah, great. We're really proud and excited that we recently became an FCM, a futures clearing merchant. So now we have really incorporated trading futures into our asset mix of the securities that are available for our customers to trade. When you open a futures account and an equity account, you do have to have separate accounts. They are 2 separate accounts, but when you have them with OptionsHouse as a futures clearing merchant, we can ease the transition of the cash payments, the cash balances going back and forth between your futures account and your equity account, your securities account, so that we had a question where they say, hey, do you trade options? Do you trade futures too? How do you decide which to do when? When you have a futures account with OptionsHouse and a securities account, you have one pool of capital, one pool of investment capital. When you're using it to trade futures, the cash required for that, for the margins, automatically will go over to support your futures positions as long as they are open. When you close those futures positions and no longer have a requirement on the future side, that cash then comes back to the securities account. So we're very, very excited. We've had a ton of customers that have opened both a futures account to go with their securities account, with their equity and options account at OptionsHouse. And it really does round out the offering that we are providing. And then the way you decide whether you're trading futures or equities or options or ETFs or futures options for that matter is it's all in the utility function of what you are looking to achieve. Futures are great instruments for futures themselves are Delta One instruments like trading stock. If you, I've seen people who use futures who say, hey, the market has just finished on all-time highs. I've got all these stocks in my portfolio. I want to take a little bit of cash off the table. I want to take a little bit of risk off the table. I want to reduce my exposure to the overall market. You know, the ideal instrument to do that is perhaps sell an E-mini S&P future contract. And you could sell those very quickly, super liquid, and really quickly without selling any of your stocks, without incurring any sort of tax implication on your stock holdings. You could lessen the exposure you have to the U.S. equity market by simply selling an E-mini S&P future. So we're very excited about allowing our customers to have both a futures account and a securities account, and be able to make that the trading within those two accounts really seamless to them, that they don't have to worry about actually them transferring money between the two accounts. That's all handled for you.
That is pretty cool, and I love to see so many brokers out there doing that, because that's been such an issue for so long, that kind of line or demarcation between securities accounts and futures accounts. And we've seen so many cool products come and go and kind of fall by the wayside because they fall on the wrong side of that demarcation, and it makes it hard for a traditional stock guy to use them, or vice versa. So I see so many brokers kind of trying to blur those lines. Obviously, there's still forms you have to fill out and things, but it's all digital now, which is kind of nice. It is kind of nice to see. I mean, we were talking about some of our biggest surprise successes and failures on a recent episode. Maybe some of those products wouldn't have failed if this stuff had been around 5 or 10 years ago. Unfortunately, that's all the time we have for the mail block. Don't worry, we get to a bunch more of your questions. I just hearing Steve talk brought all those questions you guys were up asking us last time up to the fray, so I thought I would get them in now while we got Steve on the show. All right, time for a real quick around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, like we said, listeners, this is Around the Block, where we can look ahead, and it's earnings time. Alcoa came out, so a lot of fun stuff coming up. We got a lot of the banks coming up later this week. JPMorgan Chase, some airlines, Delta Airlines, got Citigroup and PNC and US Bancorp and Wells Fargo all on Friday. So if you didn't get enough financials hearing us talk about Deutsche Bank earlier, well then, there you go. You got a bunch more coming up this week. A lot of fun stuff. Let's turn it to you, Mr. Rock Lobster. What's catching your attention? What's drawing your eye for the rest of this week?
I'd like to see if volatility can keep going down, because today the market was up, but VIX was up. I know we had a weekend markup, but even toward the end of the day, I think vol on all the options lifted. So it looks like we're at the end of the downward trend in volatility, at least until next week. We're going to see some Fed speak next week. I think this week should probably kind of semi-deadish. There's earnings. There's generally, they've been beating on at least the last cycle. Stocks did a little better than everybody expected for earnings. So that should, as the earnings cycle usually goes on, vol slowly comes in. So people will be looking at earnings. I'm looking at the financials, because if you're going to drive, oil doesn't look like it's really going anywhere. It's kind of stuck around like 45 to 50. So that story is kind of done now. So the next big grower, or the next big mover, I think, are the financials. Are they going to get an interest rate spread, or are they not going to get an interest rate spread? So that really is the last thing we're looking at for this week.
All right, and Steve, same question for you. What's catching your eye as earnings season kicks off yet again this week?
Yeah, I'm excited about earnings, and it is financials this week that are in the headlines. I'm interested to hear what their forward guidance is on what impact they think Brexit will have on them, what impact they think a possible slowdown in the Eurozone economies might have on them, how big of a deal they think that might be, and how much they talk about that. Beige book on Wednesday with the Fed. So even though we're in earnings, these macro issues keep propping up, and we have retail sales, which might be another catalyst for that Macy's trade, but retail sales on Friday as well. So there's a couple macro events still out there, but I like earnings seasons. I like being able to use the options and seeing what the options market is predicting for these moves, and then what actually comes. I think it's a great time for individual investors. We have more than enough expirations with all these weeklies in the individual names. It should be the beginning of a fun week this week, and the beginning of hopefully a little bit of summer trading, a little bit of summer excitement before we get to the doldrums of August.
Just when we thought we were safe with the earnings, you bring us back to the macro. Steve, I like it. You might be filling the viceroy role here on the show going forward. Always macro. Uncle Mike, save us, sir. What's catching your eye for the rest of this week?
Nothing new from what my other two co-hosts had to say. Just watching to see if we can get new all-time highs. And I'm also watching the Trump and Clinton to see if they say anything that can throw a monkey wrench in this market. You never know.
Uh-oh, if macro wasn't bad enough, now we're getting political. That means it's definitely time to go here on the old program. That theme means we've come to the end of yet another fun episode of the Option Block. We went all over the place today. It was pretty fun. We went hither and yon, S&P, Japan, Tesla, Nintendo, Sprout Organic Markets, all the way. FCM was quite the odyssey on today's program. But before we go one last time, let me check back in with my cohorts, my partners in crime, see what they're cooking up that may interest you. Steve, you're our guest. You get pride of place. What's coming down the pike in addition to the FCM over there at OptionsHouse that may interest our listeners?
This week, tomorrow, in fact, we are hosting a webinar on cash-secured puts. And even though volatility is a little bit low, market's a little bit high, for those investors who have been on the sideline, cash-secured puts are a way to potentially get into the market below the market or collect a premium. So hopefully some folks can come over to OptionsHouse and register for that webinar and maybe learn a new strategy.
And they just go to optionshouse.com to do that. You're going to tweet out a link. How do they get to it?
Yeah, optionshouse.com/webinars, and that's where you can find all of our educational offerings.
Easy enough. Is that just for clients, or can non-clients get added to?
We love non-clients as well.
That's kind of what I thought, but you never know. You never know how the demarcation falls at different firms. And Uncle Mike, what's cooking in the land of RCM?
Well, if you are looking for someone to manage your money, give me a call. I work with people that, even if you only have a few $100s a month to invest, feel free to give me a call. We really scale things well. I'm at 312-212-3531, or send me an email at mtosaw@rcmfs.com.
And last but not least, Mr. Rock Lobster. I know you guys have a big event kicking off soon here in Chicago, so give our listeners the details on that once again, sir.
Yeah, we have our trading summit in Chicago. If you're interested, send me a note at andrew@optionpit.com. We might have a space or two left. We might even do a live show with Mr. Longo, see a Cubs game. Also have a lot of industry professionals and traders talking to our clients about ways to make money, essentially. And then we're going to have a commodity option webinar. We'll start our Saturday classes again in August by having a commodity option trader come in and do some learning on people. So that's what we got cooking coming up.
Gotta let people come in and do the learning on them. That's always fun. All right, and on behalf of the Rock Lobster and Uncle Mike and Steve, who is nicknameless, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing to the show, and of course, for listening live. We love you guys too, and we'll see you on Thursday for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.